In this video, I'm going to show you how to calculate the interest on your car loan and figure out the car payment so you can make sure that you're not overpaying. If this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner with Sickle Hunter Financial Advisors. I bought my car about 2 months ago and I just could not believe the amount of games that were being played when I went to go and finance the car. The interest payments and the interest rates just did not line up. Luckily, I had a tool and a little knowledge, and I want to give you that tool and I want to share that knowledge. And I'm also going to show you a bonus tip that will make it so much easier. So when you walk into the dealership, you're not going to get taken for a ride. So the parts of the loan that you need to be familiar with: the time frame of the loan. So is it a 3-year, or 4-year, or 5-year loan? The interest rate that we're dealing with, how much we're paying on that loan, the actual amount you're financing. So it's probably not the whole car, it's probably a portion of the car. So we want to look at that. And of course, the payments and getting that thing paid off as quickly as possible. Those are the parts that we're going to talk about, and I'm going to go through them. And I'm also going to show you this great app that you can download on your phone and bring it to the dealership with you, so you can look at the math on your terms. I'm gonna put a link in the description at the bottom to the actual calculator that I use. Now, if you use a variation of it, that's fine too. I don't collect a fee on it. There's no referral. It's not a referral link or anything like that. You can go download it. I think it maybe costs $1 or $2, maybe a little bit more, but it's a great tool and it'll save you way more than a couple of dollars. So let's jump into it right now. So here is the financial calculator that I'm going to walk you through. I'm going to give you this example, and let's say that you have a car loan that you're going to pay over a 5-year period. We're going to have an interest rate of 3%. We're going to finance $20,000. And I want to figure out what those payments are going to be. I don't want the car dealership telling me what those payments are, because their math sometimes gets a little fuzzy. And if you don't believe me, I'm going to show you why. So let's take a look at this. So the first thing we need to do for this calculator is we need to take this payment and make sure that it says 12. So it should say 12 payments per year equals 12. The way you do that is you hit 1, 2, shift, and then hit this payment key right up there. And you could see that it brings 12 here and 12 up there. And if you did one payment, same thing. You can see it says 1 versus 1. So we want 12 payments because we're paying the loan monthly. So we're going to start from left and go work our way to the right. So all these buttons up here is what we're looking at. So this looks more complicated than it is, so I'm going to walk you through it. So let's say we have a 5-year loan. So the first thing we're going to do is we're going to hit our 5 and then hit shift and then come up here and hit N, and you can see it says 60 months. So it's going to be 60 months. We want to put in the interest rate. So all we need to do is hit 3, shift, and then the interest, and you can see that it says 3. Now the present value, PV, which is the amount that we're financing, is going to be $20,000. So we'll hit 20,000, hit the PV, you can see 20,000 up there. And we want to figure out what the payment is. So we'll hit 0 for our future value, because at the end of the 5 years, the loan will be paid off. So if we tap on the PMT, we can see that it says 359.37. So that's what our payment is. It says negative because it's a payment. It's an outgoing transaction. So this will be our payment. So let's say that we get to this math and we figure out that we cannot pay $359. So what we can take a look at is we can either extend it past 5 years, or we could put more down to get a lower payment. So let's put more down to get a lower payment. Well, if you already know what we can pay, what we could do is say, let's say it's $300 that we can pay. We're paying it, so we're going to hit the negative key and we can put it in right for the payment. Then if we click on the present value, we can see that it drops to $16,696. What that means is if we financed this amount at 3% for 60 months, then we'd have a payment of $300. Of course, that requires you to put more down up front, but this is how the general math works. Now, let's say that we went to 6 years on that same loan, and we'll bring this back up to our $20,000. Then you can also see that it drops from our original amount to $304. So if we go back to the 5 years, we can see it was at $359. But if we extend it out further, it'll bring that payment down. But that doesn't mean our total interest is going to be less. It just means that our payments are going to be less. And that's where the real game comes in. So you want to make sure that the total amount that you're paying is what you're comfortable with. So there's another way that we can take a look at this. Now this screenshot is on my iPad, but you can do the same math right on your iPhone. I'm just using my iPhone to do the screen recording so I can show you how it works. So there's actually a simpler calculator. If we hit this purple button or this blue button right here and we hit the worksheet, it'll bring down this little menu. And the first one is the auto loans. Now this is a great tool because we can look at the purchase price. And let's say we bought the car for $30,000 or we're going to buy it for 30. You could put in all the fees, the rebates, the trade-in values, and the down payments. We're just going to stick with the down payment because we're not going to have any of the other fees for this example. But let's say that we put down $10,000, which would mean that we're financing $20,000. So if we come over here and we look at the interest rate, we put in our 3%, we put in our 5 years for the duration of the loan. We could see that the loan amount was $20,000. Our total interest is going to be $1,562, bringing the total cost of ownership up to $31,562. So if we spent all this time negotiating what the price is going to be, and we decided that it was going to be $30,000 and the dealership agreed, they're actually making more money. Now, a side note, whether or not they make the money or the finance company makes the money, it doesn't matter. You're paying $31,562. So don't put any comments in the bottom saying who's making the money on the interest. I don't really care. All I care about is how much is coming out of your pocket. That's it. That's all we're going to take a look at. So that's all. That's it. That's all we're going to take a look at. So again, if we have $30,000. Now, if you're sitting there and saying, wait a second, I still can't pay this $359 per month, you can adjust those numbers right here. Now, let's say that you want to put, $11,000 down. And we hit this print button, we could figure out that our payment's going to drop to $341. But let's say you still need it to come down further. Well, you can either negotiate for it on the interest or on the total price. So if they're willing to come down, or if there's some way they can figure out how to get you a lower interest rate, let's say that's 2.5, and we hit print, we can see that it comes down to $337. So you can adjust these numbers in real time right there at the dealership so you know that they're not playing any games. Now, this isn't a video about negotiating the car. It's just about knowing the math behind it and how to calculate it. And don't be afraid to break out the financial calculator. And you can bring it to the dealership with you so when they quote you, you can say whether or not it's correct. And if you need to figure out how to adjust that math, you can do it for yourself. And I hope this has helped. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.